Okay, so this is a commercial loan scenario specifically for financing student loans. I know that's a little outside of the box, but the scenario really is an individual who has been able to build a portfolio, a book of student loans. This could apply to a lot of different things, but just for the sake of discussion, student loans. And what we're talking about is how do we leverage to get financing against a portfolio of loans outside. So loans on loans, a little bit strange. And so what we're doing is we're laying out a certain structure, a certain type of loan that we're going to be doing for the clients wanted to continue to book loans and build their portfolio of loans. So here's an individual, it's an attorney, negotiates student loans, private student loans, and then they end up booking loans for these students and have a big portfolio, and he's looking to get some financing to continue to grow the portfolio. So the first question always is on the asset side. We always ask that, is there any collateral or assets? And the answer to that really is simple. It's no, there's not, other than the actual loans themselves. So these loans that they have, we're actually using that as collateral to book a loan. So a little bit off, but they're going to use a security interest against that in order to be able to book a loan. So we kind of check off the asset thing and say, okay, not exactly real estate collateral, but you know, there we are, urgency. The next one is we want to know, like, why do you want to do this? Why is this so important? Well, for him in particular, he can't grow. He's stuck. He could do 100 million of these if he wanted to. Has a $2 million portfolio and is stuck. He can't grow anymore if he can't do this, which affects his income. And so the motive was deep and very, very specific and needed to happen ASAP. And so we know we're check on the urgency. Loyalty, who else are you talking to? Well, this was referred by another lender. And when I asked that question, who else are you talking to get more information? He said, you. I mean, it's a tougher deal. It's not that easy to get done if you think you can get it done. Loyalty was a check box for sure. Viability, again, we're dealing with collateral. We already kind of know what that is based on the assets or lack thereof. So that's probably mediocre. Cash, he has good cash position. Cash flow, we know he has great cash flow in the law firm plus the actual loans themselves. So we got to check there for debt service coverage ratios. Credibility, very credible. Ton of experience, good industry, good space. So we're very good when it comes to that. And then credit is great. No bankruptcies, foreclosures, short sales. So we're in good shape. We move on to the next. And now we're kind of saying, what's your expectations? Again, 50% line of credit against the loans that are outstanding. Bridge money. So, interest rates should be decent. Wants to be able to have a revolver line of credit and grow as they go. So they want to have what they would call a guidance line to continue to expand. So the recommendation we have is a bank. It's a bank deal for sure, a local institution for something like that. It's going to be a line of credit. 50% is the max they're going to go against the value of the portfolio. So if there's 2 million, it would be $1 million. Probably prime based, maybe floating, and it's a revolving line of credit every year, so that'll just regurgitate every year. 5.25 interest rate based upon this. Origination fees are probably 2 points, one to us, one to the bank. And it's a complicated deal, not easy to get done. And they're going to want a banking relationship for sure to bring over deposits to the bank, because they don't want to just do a one-off transaction. And so the feedback you're going to give the client is that we're going to need all their financial information, tax returns, business tax returns, 3 years, personal financial statement, copy of the portfolio information. We want to see how do they actually book the loans themselves, little background resume. So we want all that information to size up to see if this is viable or not. So this is a commercial loan scenario specifically for student loans. Probably won't run into too many of them, but they're definitely out there from time to time.